Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
I'm going to share my screen. And as I'm doing that, as a quick note, anyone join us for the first time, Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type that question into the live chat on YouTube. Will's watching it. He'll read it back to me. If you'd like to come on a show and ask your question live and direct, we also provide a link to Zoom. Click on that link. When you get into Zoom, click on raise your hand. That lets us know you have a question. We let you in. You could ask your question directly. And to give you guys a couple minutes to type in those questions, what we'll do is start out taking a look at the pre-market report to see if we could get insights on what's going on in the pre-market hours, and then we'll move on to the questions. All right. So perfect. Pre-market report. These are stocks trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. I see there are 83 stocks that made our percentage gainers list, 36 on the decliners. So from this perspective, we're looking like we're setting up for a bullish bias at the open, or at least in the pre-market trading. So far, that's how it's looking. Let's take a look at it from another perspective or a different angle, and we could come up here. We have this calendar view. If you click on it, it goes back in history to the date that you click to see what happened in the pre-market hours on that date. So far, right now we're at October 13th. This is what's happening so far. We have 429 stocks trading higher in the pre-market hours, 320 stocks trading lower. We have, as far as the volume goes, we have 179.5 million shares trading on up volume. There's 77.4 million shares trading on down volume. And if we could convert that volume to dollar volume, dollar notional, we have $1.8 billion worth of stock trading higher versus $1.6 billion worth of stock trading lower. So this also indicates that there's, slightly more bullish bias in the pre-market trading. Let's do one more check, and then we'll move on to the questions. Okay, well,
perfect.
So down here, I'm going to come back to this view here, and if you look at this list closer, you'll see we have a list. In the list of stocks, we have small cap stocks. Here are the market caps. There are ETFs in here. There are leverage products, closed-end funds. Any security listed on the major U.S. exchange, if it's trading in pre-market hours and meets our thresholds for liquidity, volume, price, so forth, it could make this list. And to narrow this list to a small group of stocks, you could use the filters here above. If you have a watch list, you could filter by your watch list. We're going to use this filter in ETF as an example. And when you click on it, you get a drop-down menu to choose from. You could see there's a list of ETFs, sector ETFs, broad-based ETFs. We're going to select SPY. That's the S&P 500 ETF. And when you do that, the list below gets filtered with stocks that are holdings in that ETF. So the SPY ETF is the S&P 500. So these are the S&P 500 constituents, and we see 23 stocks made our percentage gainers list, 7 on the decliners. So from this perspective, we also look like we're setting up for a slightly bullish sentiment at the open, and I do think that the bank stocks started to report today, kind of like kicking off earnings season, and they look like they're up in the morning, and people worried about how they will do in this higher interest rate environment, but it looks that so far the higher interest rates hasn't impacted their earnings. If you look at JP Morgan, I think that their earnings were up significantly better than expected. So they should be somewhere here, right? There we go. So JP Morgan up 1%. So seems like, the spread they're making between the deposits and what they're earning looks good. I'm not sure, because they're not really raising their, I don't know if they're paying zero. I know some banks are still paying zero on your deposits, but if that's the case, so far they're doing pretty well. So it doesn't look like the banks are in any kind of difficulty in this interest rate environment, even though we have an inverted
Yield curve.
Yeah. So I guess we gave it a couple minutes. Well, if you have questions, I'll take them now.
Yeah, we had actually, it was at the end of the day yesterday. We had a question about the open interest.
Okay.
And Ravi asked the question. He's back this morning. He asks, can Dimitri walk through how to interpret? Oh, well, it's I asked yesterday, tail end of the session, regarding open interest section under options category.
Yep.
If Dimitri can walk through how to interpret the different data in this section, it would be very helpful. Thank you.
Okay. So I'll use SPY. It's really always my go-to. So I guess under the options, I'm assuming he is looking at the open interest tab over here. And under this open interest tab, we do have more tabs in here that you could look through the open interest. So I'll try to go as many as quick, a general overview as much as I can. But let's just start out here, the main one. This is an SPY. So up top, with open interest, let's look at the top level here. We split it off into call and put, right? So, what is open interest? Open interest are contracts that traded that are still outstanding. They haven't either been closed or expired or assigned, exercised. So when you trade an option, right, you could trade it and close it the same day. You could exercise it, or if it's a zero DTE, it will expire. But open interest are contracts that you traded, they're still somewhere on the books, outstanding. Right. So these contracts are still out there that are open, outstanding. And you have the calls and the puts. You have your total open interest over here. So the total open interest right now in SPY, it's 20,580,000 contracts. Okay, so that's what the open interest is total. And we could measure it. How does that compare to the previous day? Did the open interest increase or decrease? Right. So this is the change in one day. Right, change in one day. So it increased by 1.8%. And how does the current outstanding open interest compare to the last 52 weeks? Is it on the high end or low end? Right, it's 20.5 million contracts outstanding. We know it increased, but is that a lot? Is that a little? Is that like in line? So that's why we do a percentile rank right next to it. So right next to it, you have the percentile rank, 54%, which is saying that if we looked at the last 1 year, 252, trading days, if we looked at the last 1 year data, 54% of those days, the open interest was below this current level, right? 46% above. So it's like right in the right in the middle. Right now, it's not like, doesn't look like there was a lot of trading interest in the holding an abnormal amount of outstanding. It's just like right in the middle. And if we wanted to separate the open interest in the calls and the puts, right, we could see that just the calls alone. So here are the call open interest, here's the put open interest, right? So we put the percentile rank up here, call versus put. So you could see that the call open interest right now is 7.3 million, right? Out of this figure, 7.3 million are call open interest, put interest, open interest is 13.2. This is your ratio, put call. So put divided by the call. But even though there are more puts than calls, right? If we separated them out, what is the percentile rank of just the calls versus the puts, right? Because maybe just the puts tend to trade more often and held more in SPY, and that's just usual. Is it a vehicle to protect downside risk of your market exposure, right? So if people tend to just trade the puts more often because that's what they use, SPY options for, to protect their downside market risk, this might not be unusual, right? This ratio is fine, right? And that's why we look at it, separate the calls and the puts, not even as a ratio, but just, are there a lot of puts right now outstanding, right? Irrelevant of the calls. Or are there a lot of calls outstanding, irrelevant of the puts, right? Because you don't need to trade both of them, right? You could just trade one or the other. So that's what this is up here. This is saying that right now, the puts, open interest in the puts is in the 38th percentile rank. Okay, meaning that 38% of the time, the open interest was below. The rest of the time was above. So we're on the lower end, right? It's not a lot of, usually it's above this, right? Calls, 78th percentile, so they're more elevated, right? So they're the open interest in the calls are on relative to 1 year, they're on the higher end, 78th percentile. And we could see here how much it changed over 5 days. So this was yesterday's change. This is a 5-day change. All right, so we could see that in the last 5 days, the open interest increased by 1.2%, and puts did increase by 10%, even though they're still in the low percentile rank. And if we just wanted to look at the average over the last 52 weeks, that's over here. Okay, that's just the average. Now remember, the average could be pulled, up or because of outliers, right? So if you had 1 or 2 days really high, the average could get pulled up or could get pulled down if you had, very low. So that's why we use percentile rank and the average.
Hey, D?
Yeah.
Ravi's asking, can we double click on either call or put to understand what is the breakdown of put, buy versus sell to determine bullish or bearish bias?
So with the open interest, it is harder to determine with open interest. Like right now we're looking at SPY, right? And there's a lot of open interest, a lot, right? Here, here are all these different tabs. I'm assuming he wanted me to go over this, but here I'll show you here. We wanted to take a look at it from a viewpoint of how it's distributed. So this is the open interest distributed by expiration. So you could see here, this is the October expiration, December, and then you could see the blue is the puts, the yellow are the calls. So we could see the distribution of the current open interest, right? We could look at it by strike, which strikes have the most open interest, and are they calls or puts? So this is distributed by strike, right? We could even do for each individual expiration. So this basically points us to where there's open interest, right? Where, if there's a lot, and where is it concentrated? That's what it points us to. And so we could look at the expirations, we could look at the strikes, and we could look at, are there more puts or more calls? All right, that's what it's doing right now. I believe we could do that. Let me see. There's another place we could do that. I believe in here. So this shows you the trends in open interest for the last 5 days, the change, the percentage of calls versus puts. And if you wanted to see how that's distributed, like if you click on that, right? You click on that, this is how the calls are distributed, these are how the puts are distributed. And it even tells you if these puts were converted on that strike all to stock, the percentage, what percentage of the average daily volume in the stock would that represent? Okay, so it kind of gives you a relative value, right? So what is that doing? It's all of it is just pointing to where there's open interest, what are the strikes, how far out, near term, long term, and that would be the beginning of the analysis, right? That would be the beginning, like, okay, now I have to come out there and figure out what happened. How did this, what led to this? What were the trades that led to this open interest? Because it doesn't have to be just straight buying calls, straight buying puts. It could have been a spread, right? It could have been a put spread, a call spread, a time spread. It could have been, many different things for many different reasons. And it could be something that's actually normally just rotated. There are certain strategies people just rotate from one month to the other month because that's what the strategy calls for, right? Like a buy right strategy just rotates. It's just a buy right strategy. The rule, it's a rules-based strategy, right? It's not bearish or bullish. It's a rules-based strategy that continuously does it. And that's where you start to really dig deeper in your analysis to figure those things out, right? This is the top level. This kind of helps you look at the distribution to see if there's something in there, that you want to investigate further. All right. That's what these tools are doing. Okay. Now, bullish or bearish, you could see it's distributed. There's bullish and bearish trades in there from the open interest, with different intents, a lot of different intents, especially in SPY. Right? Maybe in this particular stock, I'd have to go look at it, and figure it out going backwards to find the trade. But as far as SPY goes, there's too many people with too much different intent. And really the only way probably we could start getting a sense of, well, people are lining up, buying a lot of puts or buying, a lot of calls or selling or whatever. We'd have to probably, come back here, and start seeing like these very elevated and trying to figure out where this is building up. All right. So from this level, from the way I'm explaining it to you, I'm trying to walk you through the data from the high level, walking down, right? To get to if we could get down to the actual strike and to the actual option, to the particular option. All right. So don't think of it as bullish, bearish. Think of it as like, where is their interest? Where is their open interest? Like where is it? We need to detect it. Okay. So let me know if there's a follow-up.
All right. Well, we've got a little bit of a delay. So Ravi, let us know if there are any other questions around the open interest. That was great, D. Thank
Yep.
you.
I could continue on this if he does, unless you have a different question, but I could continue on this.
Yeah, that's good.
So, I'm going to come down here. This is a breakdown by the different expirations. Okay, so we looked at it from the top level, aggregated, then we aggregated by expiration. All right, so start out here, October 13th, that's going to expire today. And we see a couple different metrics here. We see that yesterday, in October 13th expiration, 2.1 million contracts traded. All right, 2.1 million contracts actually traded. The open interest this morning was 1.4. But that didn't all happen in one day, right? Open interest carries. So as long as there's open interest, it'll carry over. So how much did it change on the day? Well, on the day, it increased by 238,000. So even though 2 million contracts traded, the open interest increased only by 238,000 from the previous day. So if we compare the volume versus the change in the open interest, out of 2.1 million only divided by the change, 238,000, the volume was 9 times greater than the open interest, which means there's a lot of churn or transference of risk, but it's not building up from that volume, right? So 2 million contracts traded, but we didn't see a buildup of 2 million new open interest. We only saw 238,000, right? So the open interest didn't build up as much as the volume suggested, which means probably a lot of turn in there, a lot of churn, a lot of people are just using it as quick tools to quickly get in and out of positions, but that's a lot of trading, not a lot of just establishing positions and holding. Okay, and that conversion translates to 11% of how much of the volume converted to new higher open interest, 11%. So that's showing you kind of if you wanted to see where was their volume that actually made a difference, right? So here, 23,000 shares, 23,000 contracts traded, and that increased the volume by 12%, which is 53%, right? So that could be something of interest to say, well, what happened there, right? Which trades happened where whatever trade happened, it converted to new open interest. So that position is held. Somebody was committed to it, right? There's a bigger commitment to that trade. Here's 94%. So here, December 1st, 15,000 contracts traded. We can click on that. The open interest increased by 14,000, 94%. So here, why is this? That looks like a bug. Yeah.
I mean, we may want to leave it for because we're right near the opening for Monday. But Ravi was asking if you could look at a ticker. He is asking about DG. I think that may be Dollar General, and do the analysis. Look at because he's SPY. There's so much open interest. He'd like to see something with a little less, if that's possible.
Okay.
I don't know if you want to do it now, or we could look at it on the open interest in DG on Monday and leave it for Monday's show. Right.
So with DG, right, I'm on DG right now. Here's here's DG. The only, I kind of just clicked on the first, where did I click on? October 27th. I clicked on the first one where I saw there was a big conversion, right? 64%, even though there's only 745 contracts traded there, right? It's not a huge amount. I'm just trying to eyeball if something sticks out. But let's just look at that one, October 27th. It's not a huge amount. The one thing that's noticeable is that the open interest is elevated, really high. I know if earnings are coming up. I don't know what's going. Was it earnings today?
I have no idea.
So the thing that only sticks, here's one that converted, right? So 745 contracts, 475 converted, a 64%. So if we look at the volume here, right, this is the breakdown of the volume from yesterday. This one 194 looks to me like that's the most traded. 110, right? 110 strike out of the 194, 157 converted. So we could just open that up just to see, well, what traded in there. I don't know why my computer's slow today. Let me see if that. Okay, so if we just want to take a look at it, what traded, here it looks like. So what happened? The stock was down yesterday. And to me, just looks like a lot of calls traded.
Michael McRae was saying this, they've had a CEO change in DG.
Okay. All right. So, so this is just, if you look at it, just a lot of calls were trading on that line yesterday. Not even one, you could see they traded throughout the day from 10 to 12 o'clock, 1 o'clock, so total volume of 194, 43 different trades. There wasn't that much open interest in it, but that's what happened yesterday, right? So a bunch of calls traded there, average price 56 cents. And as we could see that a lot of them, whatever, from 194 contracts, 157 of them, right, increased open interest. So they're holding on to them, right? So whoever did those trades increased the open interest. That means they're staying committed to that trade. So that was the only one that really, and again, it's not like a huge amount, but what's interesting maybe is that there is a high elevated open interest in both the calls and the puts. All right. So you could see here 152,000 contracts are open on the calls, and in the last 52 weeks, on average, there's 52,000. So you could see 3 times the average. And even in the puts, 96,000 versus 44, more than 2 times. What maybe stands out just in the last 10 days is that, the calls, the open interest increased by 10%, the puts decreased by 9%. So these were just the trends here.
Robbie's asking, there's an indicator here that says long buildup. What is the interpretation of that?
Yeah, so this one, you said. So here, what this is saying is that there was an increase in open interest, right? An increase in the open interest, and it looked like there's more buy pressure than sell pressure, right? According to the data. So the idea there is that our interpretation is that the open interest was due to a accumulation of somebody long buildup, right? They paid up higher premium and increased the open interest. So there's a long buildup, or it was a result of somebody needing to buy those, right? Because if you're paying higher premium, right, it's like, think of it as in options world, right? The options are changing due to the underlying, but if you're paying a higher premium, you're buying more options. If the premium is going down, the relative premium implied vols, there's more sellers. So long buildup would be in the option where, you know, the open interest increased and the paying and it was a result paying higher implied volatilities.
All right. Awesome job, Dean. We're a minute into the opening bell.
All right.
Great job as always, Ravi. I hope that helped. You can obviously send an email, support@MarketChameleon. If you have more questions, we can hit them on Monday. Big shout out to one of the most active chameleons on the chat, Chuck. Happy birthday.
Happy
have
birthday,
a great
Chuck.
weekend, everybody. Awesome job, D.
All right, everyone. Thanks for joining. Stay safe out there. Have a great trading day and hope to see you guys Monday.
Trade in peace, chameleons. Uh-oh. I just went to the Zoom and we had a couple questions.
Oh,
and
okay.
it was from Rob. Ravi was on the Zoom
Oh.
as well. So it was the same questions. All right. Hey, Ravi, if you want to come on, if you have more questions and you want to come on live, that is something we could also do on Monday. Just put it in the YouTube chat. All right. Great job,
All right.
Dean.
All right, everyone. Thanks for joining. Have a great weekend. Stay safe out there. Have a great trading day. Yeah, hope to see you guys on Monday.